Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Allpower Research and Analysis, and this is Daily Analytical Report, where I will show you what's going on the markets. We will try to look for decent trading setups, decent trading occasions. But first we'll start with macro calendar as always, and you can see that we got GDP from China. Well, okay, let me show you first what happened yesterday, right? Because yesterday we also had important data because we had interest rate decision from Canada. Well, no surprise here because Bank of Canada lifted interest rates, but although it was expected, it still brought us some volatility on the markets, but it was a short-term volatility, this kind of movements which I don't like, because at the end of the day, well, today, almost 20 hours after that, the price is in the same place as it was before. So we had this decision, the price went higher, lower, and ended in the same place as before the decision. So if you had position and your stop losses was too short, too tight, most probably it was activated and now you'd be on profit or you would be in the same place as before that data, right? And that was actually it. We got also CPI from Eurozone. I don't think we saw that during our yesterday's report, and the CPI came better than expectations, 1.1 instead of 0.9. Well, so we can see that the stimulus from ECB finally is working. Well, we can see the data picking up actually for a long time, so it works finally. As for today, we got data for Australian dollar, participation rate and employment change were significantly better. Unemployment rate dropped, but I think those two are more important. Also, we got GDP from China, which came better than expectations. Both of them are good information for Australian dollar, because Australian dollar is obviously influenced by the local data, by the domestic data, but also is influenced by the Chinese data because they are biggest trading partners. As for today, we are waiting for 4.5 hours for the data from the housing market in US, but it won't be so important. And tomorrow we do have retail sales from UK, so actually all important data will be shown today. That's the situation on the market. Fundamentally, well, we do not have like a leading story. Leading story is China's GDP. We have corrections on cryptocurrencies. We do have this decision from Bank of Canada, and that would be actually it in terms of the fundamental drivers of the market. So that being said, let's check the charts. So first we'll start with gold. We have 3 instruments I prepared for the Trading Sniper video. Gold was in an uptrend, midterm uptrend. Since the middle of December, we made new highs. Here gold climbed almost over $100 higher. Let's check how many. Yes, $107. I created double top formation and broke the midterm uptrend line. This breakout can be a negative sign, but there is no sell signal here yet as long as we stay above the horizontal support, because they broke the trend line and they stopped on horizontal support here. Breakout of $1,324 can send the price much lower to $1,300, right? So as long as we stay above, there is no sell signal, there is a positive sentiment on this instrument, on gold. So as long as we stay above, charts are not very pessimistic, but breakout here should trigger a midterm sell signal with the potential target of $1,300. Okay. Next one is American dollar to Japanese yen, where we were telling you yesterday about this double bottom formation with a divergence of the indicator. See the divergence, right? So if you see the divergence, I can delete indicator because I'm not using one. Just for you to show you, because I know that many people are using indicators. So the price, instead of double bottom formation, created inverse head and shoulder formation, left shoulder head and right shoulder, and we broke the neckline. The neckline is this orange area. But why this orange area is not only a neckline, but look at that. That was a resistance in the beginning of August. That was also a support at the end of November, and it was just important horizontal support resistance level. There was a breakout of the neckline and the horizontal level, and we got a huge upswing. As for the potential target, well, first one was reached because it was the 38.2. As for the second target, I would say it's somewhere between 50% and 61.8. This yellow area. Look at that. It was a support in beginning of December, middle of December, and the beginning of January. So there is a chance that we will get there quite soon. Here, yellow area. FTSE is continuing the signal created on Tuesday, where we had this bigger reversal on stocks, and then we marked this potential path for the British index, for the British stocks, and the price is now following this. So let me remove that we can clearly see better. Why I wanted to see that? Because that red area is ultra important horizontal support. It was ultra important horizontal resistance, and after the breakout, traders didn't really have a chance to test it as a support, right? There was a breakout and we didn't even have a chance to test it as a support. Now this chance is arising here, and I would love to see the price getting to that area and bouncing from that area. Okay, that's my view on FTSE. Next one is dollar index. Dollar index created this bullish candle yesterday. Today the price is making higher highs and higher lows, which is kind of a confirmation for this. We should see a movement towards the horizontal resistance and towards the midterm downtrend line here. What I'm seeing here is a potential upswing to this red area, but the midterm long-term sentiment on dollar index is still negative. American dollar to Singaporean dollar. Here also we're waiting for a bigger bullish correction. That's my scenario for this instrument. Australian dollar to American dollar. Although you can see that there is a correction on dollar, so dollar is gaining a little bit of strength. We can see that it's rather limited on Australian dollar to American dollar. It's because of this better data from China, from Australia. On an hourly chart, you can see that we are holding quite good. There is a very important midterm horizontal support here, which I just placed on the chart. 0.7940. As long as we stay above this area, the sentiment is positive. There is one obstacle here. One top, second top, third top, triple top formation. Probably with divergence. Let's check. Obviously there is a divergence. So a breakout here will trigger this triple top formation, which can start a bigger correction, right? But for a bigger correction, we would like we would have to see the breakout of this horizontal support and this midterm uptrend line. So price getting below midterm uptrend line should be a very negative sign for Australian dollar to American dollar, with a potential target on this blue area. So that can be quite a significant correction. But as long as we stay above the trend line, right, the sentiment is still positive. New Zealand dollar to American dollar still above the uptrend line, still good. Price is making higher lows, higher highs actually as well, right? Higher high, higher high, higher high, low, higher low, higher low. So the price is making that. As long as we are making that, the sentiment is positive. Euro dollar. I'm not enjoying euro dollar right now. It was so technical recently, but now what's that formation? I don't know what that formation is. Okay, here there is a horizontal support which became a resistance. That's kind of a head and shoulder pattern, left shoulder, head and right shoulder. So this is not like neckline, there is a horizontal neckline here. Maybe I will delete that. Horizontal neckline. Now we are testing this neckline as a closest resistance. Maybe it has some logic behind that, right? We should see the breakout of this lower line of this small flag, and if we will see a breakout of the lower line of the flag, we should get a negative sentiment here. But in the short term, price should just aim here 1.2080 to test that as a closest support. So maybe I will remove that not to confuse you, but yeah, something like that. But first we need to see the breakout of the lower line, right? Once we're gonna see breakout of the lower line of this pattern, that will open us a way to 1.2080. New Zealand dollar, euro to New Zealand dollar is playing some games with me. I was telling you about the sell signal from this head and shoulder pattern and a breakout of a neckline, and then testing that as the closest resistance. The price went up, but that was a false comeback. So this resistance got really defended. And this wedge is no longer here. So actually what we are having is a breakout of the neckline, then the price tests this neckline as a resistance, and then the price goes slower, which is actually a very bearish pattern. And with the recent developments here, there is a high chance for a further bearish continuation, especially that it's almost on a daily chart we have a bearish engulfing, right? It's an outside bar, it's not an engulfing. What we are missing with engulfing is higher opening here, higher opening on yesterday, on Wednesday. That would be a bearish engulfing bouncing from the neckline, and that would be a strong sell signal. But I think it still has a potential to be a strong sell signal. I think the steel price can decline further. So with this breakout bounce from the uptrend line, I can see a bearish potential here. Don't forget about this uptrend line. We have one, we have second one. Once this uptrend line will be broken, that will be a strong sell signal. We have a potential movement, maybe not to Fibonacci. Actually, Fibonacci does not work well here. So if something does not work, there is no reason to follow that. That can be a nice movement here. Stop loss 200 pips, take profit 600 pips. Yeah, looks promising. Euro to British pound. On euro to British pound, what we do have here as a breakout of the midterm uptrend line, but I wouldn't call it a significant, especially that we stopped exactly here. So it means nothing. Euro to Japanese yen. I'm just waiting for the breakout of the upper line of it. That would be a continuation of this false breakout signal from here. We will see. There is pennant. Pennant is a trend continuation pattern. Trend is positive. So it should see a continuation of an upswing, right? That's what the technical analysis is telling us. And I think that can be a strong pattern, that can be a strong setup. American dollar to Canadian dollar, that's what I'm talking about when I was telling you about this interest rate decision. And the price just made an upswing, downswing, and I actually are in the same place as before. Like it was before, that was the reaction, and that was after, right? So nothing really changed. If nothing changed, there is still the sentiment, and this previous sentiment, and the previous sentiment was negative because we broke the lower line of the wedge formation here. We broke horizontal support. Now the price is creating a trend continuation pattern, which is a rectangle. So we should see here this trend being continued, so a breakout of the lower line of this formation. S&P 500 is doing quite right, much better than FTSE, for example, and DAX. So there was this, that's a scary candle on Tuesday, but yesterday it was denied actually. So traders brought the positive sentiment back to the market, and the party goes on. We are above 2,800 points, and I think that says it all. Euro to Swiss franc couldn't hold above the midterm upper line of the wedge, couldn't hold above the horizontal resistance, which actually creates a false breakout here, false bullish breakout. Let me just highlight this. That's a false bullish breakout, which opens us the way to the horizontal support and to this dynamic support here. Right here, yes. I can see a proper occasion, trading occasion with the price getting here. stop loss, take profit. That's good in terms of risk to reward ratio. Risk 30, reward 70. Let's say 70. More than twice as big profit than loss. Next one, WTI. WTI is having a good time. We are having a small correction, but it's nothing significant. Horizontal resistance here. Dynamic support here, kind of an ascending triangle pattern. Not too strong though, but still it's just a correction, and the long-term sentiment on oil remains positive. American dollar to Swiss franc, they're trying to reverse a little bit, but it's not very strong reversal. Sentiment stays negative here. Now Bitcoin, look at that. That's success story, right? That's success story on Bitcoin, because here we were here actually we are expecting the drop towards the towards the yellow point. The price went there, and actually it was support, and after the breakout it became a resistance. So we thought that price, well, we knew that the price can get there, and the price did. We didn't say that from here we will have another bullish wave. We said that it should be a good support, and it was a good support, especially that now it's respected as a resistance. After the breakout of the support, we were wondering how deep we can go, and we tried the impulse correction pattern. So this drop from the middle of December here was repeated here, actually almost precisely, very precise here, and actually the price bounced here. Okay, the thing is that as long as we stay below the yellow area, there is no chance for a bigger reversal on cryptocurrencies, on Bitcoin, because as long as we stay below the yellow area, which is a horizontal resistance, the sentiment is negative towards cryptos. Sentiment will turn into positive one once we will break the horizontal resistance here and a midterm uptrend line. So price getting here, that will be a buy signal. Price still being below the yellow area, that's a sell signal. Cable, we were expecting, well, we knew that the price would get to this green resistance. The price did, but they were trying to get higher. They were trying to break this resistance. Good for the buyers, right? Very good. But as you can see, there is a supply here. Demand couldn't force this resistance, and the price just reversed, but the buying pressure is still high. And again, one hint from the trading point of view. Look, we created that yesterday, and you should remember that. There was this support. So we didn't say that price getting there is an enough reason for a reversal. No, it was not. He said that it can be a reversal, but you get higher chances for a bearish movement if the price would break this uptrend line. Actually, support of, yeah, we can call it uptrend line because it's connecting higher lows, right? And we created this. Once the price will break it, sell signal with a potential movement towards the horizontal support. The price did not break that, so there was no sell signal. And that's a very important lesson, that even if you think that it's a good place for a reversal, wait for the bears to show up. Just the fact that it's a nice place, nice potential place for the movement does not mean anything. You need to see actually the price going lower. If you don't see the price going lower, it means that it's a good level, but just on the paper. Right, so you would prefer to wait for a breakout of this line, which is still there. That's still on the table, this scenario. You just have to like adjust it to the current price movements. Next one is DAX. DAX is struggling, FTSE is struggling, but still, as long as we stay above this line, the sentiment is kind of positive. We are getting closer to the uptrend line as well. New Zealand dollar to Canadian dollar, we had bigger volatility because of the Bank of Canada. You can see here. What's that? That's kind of a rectangle pattern. Let's adjust it to the recent price movements. I would say that this is the resistance now. Or it's better to be safe than sorry, right? Or this. As long as we stay inside of this rectangle, that's not a good place to trade. Canadian dollar to Japanese yen, I was thinking about short position here, but well, first reaction was good, but there's the sell signal here is not so strong anymore as I was thinking before. Australian dollar to Canadian dollar, they tried again to close above the horizontal resistance. They didn't manage to do that. Once they will manage to close above this resistance, that should create us a buy signal. And Australian dollar to New Zealand dollar, after this false breakout here, price advancing higher. And we can see a positive sentiment here, but we need to adjust this line here. Buy signal will be created once the price will break the black line. Okay guys, so end of the week is rather quiet in terms of the trading signals. We do have some good trading occasions, right? We do have them, but it's not so good as it was before. And many instruments, we just have to be patient and wait for the proper trading signal. Okay, thanks very much for joining the daily analytical report. And now we'll have a short break, half an hour break, and after that we'll have a webinar about trading psychology. I hope you will all be there. Thank you very much and goodbye.